All right, so check this out. You guys can see the article right here from the Business Times. Gold is struggling for direction ahead of the U.S. Fed decision. Today's the day that the Fed will make their decision as to whether or not they're going to cut interest rates, leave it alone, or will they increase it. Apparently, that's going to affect gold's price. When you see the price chart for gold, I don't think it's looking for direction in price. It's already been trending a certain direction. Now, maybe that trend is going to break after Jerome or the Fed releases their decision. But needless to say, these articles could be quite decisive because we can see here that gold has been trending slightly to the upside. Let's look at this article real quick. Gold prices flitted. I don't think they meant by flitted. I think it meant flirted in a tight range on Tuesday ahead of the United States Central Bank's verdict on rates and comments from Chair Jerome Powell for clarity on the timing of easing monetary policy through a weak U.S. dollar and lower bond yields lent support. Okay, cool. Now looking at this, the U.S. dollar index weakened 0.2%, which generally makes gold more attractive to other currency holders. Yields on benchmark U.S. Treasury notes held near a 2-week low. Traders are betting on 5 quarter-point rate cuts for 2024. So they're expecting the Fed throughout 2024 to cut interest rates 0.25%, 5 times. Hopefully, they're looking forward to occur in March, with the first of those arriving at a coin flip chance in March. So what about today? You think they're going to leave it alone? Of course, they may just leave it alone because they will want to see more economic indications that the market is able to absorb these higher rates, that the market inflation rate is hovering a little bit higher than 2%. That will keep them at bay from really acting to lower or cut interest rates. What's going to happen to gold's price? Understand that the market, they're already prepared for the long term, maybe a couple of months of what they're forecasting. None of these individuals who participate on Wall Street, who delves into gold prices and its movement on a daily basis, is not worried about today. They're not worried about Jerome Powell because they already ran the scenarios. What if he leaves it alone? What if he does cut rates? What if he increases it? They already have those situations panned out. And then once they do that, they come and actually put on their position. Like nobody's shooting in the dark. They've done their research. So from our perspective, we don't need to continually to try to run fundamental analysis. We don't need to try to place 15 technical indicators on our charts because the market has already spoken. Every price bar that we see, every volume bar that we have on our chart gives us that information in a cleaner sense. So we who have busy lives don't have to run and actually open up the articles, read the fundamental analysis reports on gold, what's going on across the global economy. They've already did that before they even came in and bought or sold their positions in gold. Now you can see from our last video in gold, we were expecting the market to go lower. Needless to say, which is a good thing, I guess, if you're a buyer, gold did not go all the way down to our 1,760 price. That is where our ultimate TP price was, but it didn't go that low. Instead, price came down to that horizontal line around $1,800, something that we talked about on our video. So I'm not worried. I'm not concerned. I'm not questioning, okay, why didn't gold go all the way down to 1760? I've already spoken about that on the video. So were you able to grab some bag off of that movement to the downside in gold? Because it wasn't long. You only had a couple of days of when we did that price prediction to come in and grab some of that out. 2%. After that, market in gold ran up, went crazy, has even broken outside of our descending line. That should have told you right there alone that the market did find direction, that it was bullish. So it's not struggling to find direction. It has direction, which is currently to the upside. So let's go ahead and put that there. Market in gold is bullish. It's currently trending to the upside. Is that hard to see? Could not the article, the writer, the author of the article not see this before they produced that title? It's not struggling to find direction. Look at it. Gold is bullish. Look at how many times the price in gold came and hit that trend line. So now, what do we expect here going forward? Well, there are a couple of areas that I'm going to show you that you need to keep an eye on. Specifically that one if you're a buyer in gold, because that area there is a sell zone, meaning that I will be expecting selling pressure to increase, which therefore will impact the progression of movement higher. Also, this is a buy zone right here off of this trend line. Okay, so let's say that the Fed does something that upsets the market in gold. As long as it holds this buy zone, we're golden. We're going to look for the price to consolidate. Here's the next buy zone down here. Okay, because I'm looking for gold to continue to go up. I am. But those two buy zones needs to be maintained in order for that idea to maintain validity. Okay. And this is the ultimate sell zone up here in gold. So I'm going to go ahead and put that there. Back on the daily chart. And let's look at it on the longer term charts first. So we got the field laid out. Okay, we're trending. We have our buy zones down here at the bottom. We got our sell zone up there at the top. Here it is on the 5-day chart in the market in gold. It doesn't look too bad. It doesn't look too weak. It doesn't look too bullish. It just looks. Okay. Here it is on the 2 weeks. Take a look at gold on the 3. Gold on the 5. And then let's look at gold on the monthly chart. Since today is the last day of the month. So like I said, I really don't see a massive indication that the market is definitely bullish. But I do suspect that it's going to try to lend itself to go up. My targets would be, my first target is going to be right here. So let me go ahead and show you this. Then my ultimate target is going to be up there at the like $2,080, $2,090. Those will be my two areas. So let me drop this on the daily chart real quick and we'll be finished. So that first target will either be at this first sell zone, the high or the low. It's only a 1% move. I understand. I'm not that bullish. Here it is, my second target, either at the high or the low, in between, 2.4% there, $2,087. Right there, okay? Now I want the market in gold to really hold this first buy zone. If we go down to the second one, then we may actually see the market continue to lend itself to go to the downside. So we'll see how that works out. All right, I'm finished. Go ahead and give me your thoughts. Make sure you maintain your profitability. And as always, trade different.